Alright, everyone, it's LowFX and we're back again in the market. And as you can see right now, this is the market I want to show you guys, because we're currently on yep, this is the euro, sorry about that, the USDCAD market. The USDCAD market, and yes sir, back again in the market. And as you can see, we were on I made analysis on this trade that was like 2 weeks ago, and then we took the trade last week, and we took the profit from here to this high. That was from here to here. That was from, we got in the market here, and we got out of the market here. It was a 1-to-9 risk to reward ratio trade, I remember. 1-to-9. But here showing 1-to-6 because we probably got in on the 1 hour, so our risk was very low. So right now we're not in the trade though, but this is just like we're gonna enter the trade when the market. Let me just clean this because we're not yet in the trade. Yeah, so let me just like this, just I'm giving this as a brief top down analysis on the USD pair, and I'm gonna share some insights. You get, so obviously you can see that this is an impulse correction. First of all, like I told you, if you understand the meaning of technical analysis, is going to enhance your profitability in the market. As you can see, this has been the history of price for a very long time. If you observe price, we've been seeing this. This is what happened in price. Check here to this point with the Fibonacci. We'll see what price did at the 60 level here. We saw an impulse, and this impulse came here. Good. So we did the same thing here, to this point. Good. And immediately price came down to this level here. We saw a double bottom. I'm just telling you how we got started with the entire USDCAD buy and all that. Yeah, we saw a double bottom here. As you can see here, this is a double bottom here, and this was the retest. So we got in the market this box here, at this box here, because that box probably after the impulse, if I should use the Fibonacci again, to this point here was at level 0. Yeah, you can see this box here. This was where we saw the reversal, so that's why we got in the trade. Good. So we were seeing level 0.5 to level 0.6. so any reversal you see in that zone is your entry. Yeah, but I always enter from the 4-hour time frame. Mind you, like I've always told you guys in my previous chart, in my previous videos, I always use the line chart, but for the sake of this analysis, I'm going to use the candlesticks. So this was it. We understand the market moves in trends and levels, or you can say in trend and zone, psychological zone, optimum trading zone, whatever you want to call it. But first of all, you need to understand there's what we call previous zone and future zone. Future zone are zones that are formed as price progresses, and previous zones, historical zones, are zones that are formed from previous price. Let me tell you something. The previous zone, which is the historical zone, they do not alternate the direction of price. They only validate the movement and help you forecast. They validate the movement, they validate structure and help you forecast future movement. I'll repeat again. Previous zone, which is historical zones in the market, they validate structure and help you forecast future movements. You understand what I'm trying to say? But the futuristic zones create levels for latter structures. I'll repeat again. Futuristic zones create levels for latter structures. Let me give you guys an example. In this, the USDCAD pair, you can see here that we from price here, this was a lower high. Here my crosshair is here. I don't want me to let for more than 10 minutes. This was my lower high. This is a lower low because it broke this high, this previous higher low here. So we had a new lower high here, right? So let me just draw that for you. This is our new lower high now. You get, so upon this new lower high, this when this price was happening, before this whole future price started happening, when this was happening, this was our futuristic zone. But our historical zone was this zone here, which was this one. This was our future, this was our historical zone, our previous zone here. So we knew that the moment price broke this zone, structure would be, like I told you in the definition, structure would not have to form here in this zone, which is here. You can see that right now. Good. Structure will not have to form there for future price movement, because price, like I told you, Swag has also told us that the market, as you can see, is a work of art. History repeats itself all the time, and the market cannot do something without letting you know. If the market is going down, it's going to give us a pattern. If it's going up, it's going to give us something. You understand? So pattern, structure, like I told you, structure was formed. And what is the structure that was formed here? The structure that was formed here, if you should enhance this thing, you see that there was a correction pattern that was formed here. Obviously, boom. This, I guess, is supposed to make you like $1 million. If you just if you just didn't just this thing in the market, you probably be a millionaire in dollars, I mean. Yeah, so with this, first of all, we have a zone. Second of all, we have the correction pattern, and third of all, this zone here was our previous higher low. If you observe, this current zone broke this previous higher high, making this a higher high. So, and now we discovered that price broke it. So we had it that there was a retest here. Number one, it was in the zone. Number two, number one, there was a retest and it was in the zone. That means it was validating structure to create pattern. You understand? And right now we can see that there's a pattern being created here, which is you can call it a rising wedge, but I call it generally a correction pattern, because there was an impulse before this correction. And after this pattern here, what do we see? We saw a morning star, which is this candle part, this green candle, the doji here, and this other red candle. Some people call it, I really don't know if it's a morning or evening star, but I just know when I see there's a pattern like this, I know it's a reversal pattern. So after this pattern here, simple, we know that the trend has changed from an uptrend to a downtrend, and the market kept on going down. Having the sense that the market started going down to this level, we now spot our new lower high, which was where this became our new lower high. This one here became our new lower high. I don't know if you would not notice that, but this became our new lower high because this low from this previous lower high broke this low here. Let me show you guys. You guys should pay attention to details. This market is very easy, man. Number two thing I want to let you know: do not use. I will never advise you to use a wick to determine breakouts. You can use a wick to determine fake out, but not breakouts. Look for bodies. We want to know where price stopped, where sellers and where the close of price, was it above the previous level or was it below? You understand? So we can see that the close of the previous body of this body here was below this level here, making this our new lower low and this our new lower high. Because of this zone it had to retest, which is the correction level here. You understand? Good. So having known that, we already have it in mind that okay, now we have a lower high, we're expecting a lower low. But don't forget that in the bigger picture, we're expecting this market to bounce off from this level, because this is the Fibonacci level, and there was a breakout in the utmost high here. You can see this breakout here. So we know that when price came here, there was going to be a pushback up. You understand? So, but I'm not just going to buy when price gets there, because I knew there was a trend before price came there. So all I'm waiting for is a breakout, or more of, you know, a reversal pattern. So I didn't see the breakout though, but price gave me something else. Price gave me a reversal pattern, which was this double bottom here. And upon the double bottom here, there was an impulse that came here and retested the double bottom, the neckline of the double bottom. You can see my zone here, and this was the second touch upon the trend line. Although I don't use trend line for trading, because the trend line is not reliable. You understand? Zones are more reliable. So you can see there was a breakout. So we having known that this was our first lower high, lower low, lower high. If you observe, upon this touch there was no breakout. It came here, it didn't break out, it just tested it with a wick and gave us a correction here and broke out impulsively So the next lower high, the higher lower high, which was this one here,